We are back with another OVTLYR University lesson, and all of our students are here today. It's good to see all of you gentlemen. How y'all doing?
Good afternoon.
Hi, everyone.
Good. This is going to be a big lesson today. Trading psychology is by far the #1 most important thing about trading, and it's not even close. Entry signals, they don't matter. Exit signals, they don't matter. Position sizing, they don't matter. Nothing matters unless you have your trading psychology in check, right? This game in general is 90% between your ears. The entry signals, the exit signals, that's the last 10% of it. If you cannot execute, like the song was saying earlier, if you cannot execute, you cannot do this game. So I'm going to do my very best to teach you as much as I possibly can. I hope that's okay with you guys. And I hope that's okay for everybody here in the chat. If you are in the chat, do me a favor, type #Q with your questions as we go. But do me a favor, if you can hold off questions till the end, we'll have like a 10-15 minute question and answer time. And I would really want to make sure that we keep on topic. So again, type your questions with #Q, and I'll try my very best to see those and answer them as we go. So let's get into today's lesson. Let me share my screen here. Hope you guys are ready. It's going to get deep, real deep, like deep thought over there. Welcome to OVTLYR University. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk. As I take a drink from my DuckTales mug. Together as a team. So go ahead and subscribe if you haven't already. Like I say, lesson 7 today is on trading psychology. But before we get there, we got to go over our homework. All right, gentlemen. Did everybody watch the video? If you watch the video, raise your hand. Everybody?
Yes.
Everybody?
Yeah.
Okay, good. Now, the reason I wanted y'all to watch this before today's OVTLYR University is because we're going to be talking so much about what's not only in this video, but in this book, Trading in the Zone. If you have a copy of Trading in the Zone, raise your hand or show me your copy if you have it handy. There we go. Oh, Joe, what the frick, Joe? Dude, Amazon delivers to your doorstep. Did you know that? Like, actually right up to your, there's going to be some dude in a blue vest, and he's going to chuck it right at your door just to make sure that you don't miss it. All right?
All right, I'm in.
And it's on Audible. It's a great read on Audible as well. I'm just putting that out there. All right. Paul's got his on his iPad. He's going to chuck his iPad through the computer over to you if you keep it up, Joe. So, yeah, Mark Douglas was one of the trading or market wizards. However, he's passed on. We didn't get a chance to work with him, but his lessons still live on YouTube. In fact, if you go onto YouTube and just type in Mark Douglas psychology, there are hundreds of videos. There are even some videos that were taken from conferences that people paid thousands of dollars to go to. 2 8-hour-long videos, 16 hours worth of Mark Douglas are on YouTube for free for you to go learn. Let me put this as bluntly as possible. If in 2025, you have not figured out how to use YouTube to become an incredible, amazing, profitable trader, you have no more excuses starting right now. If you are already profitable, you are doing something wrong, and it is my job to help you undo those wrong things. But you have to listen, all right? Like Mark Minervini told me when I was working with him, he said, you need to shut up. I don't care what you've been doing. You need to learn the right way how to make money in the markets, and I'm going to show you that today. So in the homework, we got to learn a lot from market wizard Mark Douglas. Now, if you are watching this and you haven't seen it yet, you can actually go onto YouTube. I'll show you where to go and go to my channel or the OVTLYR channel. Doesn't matter where. And you can go to, hold tight real quick. You can go to the playlists here, and you'll see the OVTLYR University playlist. In the playlist, you're going to see that video right there. So don't miss out. You don't have an excuse at this point, okay? You do not have an excuse. You need to go watch this right now. Well, after this. So second question, did you guys work on creating your own trading journal? Now, here's the thing. I don't expect your trading journal to be perfect. I know JC had some questions in the Discord. And it doesn't have to be perfect right away. It's going to evolve over time. It's going to change. It's going to expand. It's going to contract. You're going to find a way that works better for you. Has everybody had a chance to at least create some sort of trading journal? If you have, raise your hand. All right. All right. Very good. Very good. And then lastly, have you guys started working on any back testing? I would really love to know if you have some back testing outcomes that you'd want to share with the group. I would love to know those. Who wants to go first? Do you have any back testing outcomes? Go ahead, Joe.
Well, my outcomes are actually related to some futures trading that I was doing, and it directly relates to that video. One of the key points I pulled out of that video is you have to have a emotional mindset that you're going to sit in cash, or like we've all recently learned, you're going to sit in some holding account that's going to earn you some interest, right? But largely in cash.
Right.
Well, what I found in making my futures trading plan was technically it was great. I was concerned of VWAP. I was concerned of RSI2 and stochastic, and all those things were great. But what I couldn't do was emotionally follow it. And it was the back testing that proved to me that most times when I was losing, I was getting in when it had nothing to do with my plan. I was getting in because I saw the trend changing. So that's my takeaway on this video and the back testing experience.
Dude, that's a great insight right there, right? So basically what you proved was your plan works, but you didn't have a plan that worked with your personality just yet.
Yep, exactly. And I still find it difficult to stay out, but the OVTLYR 9 really helps that decision, and it helps keep you relaxed. When you're trading futures, you're sitting there watching the chart all day long. But with the OVTLYR approach, you're not. It's far more relaxed and much easier to stick to the plan. Awesome.
I'm glad to hear that. All right. Any other things that you guys observed in your back testing? Anybody else care to share? Go ahead, Mike.
My biggest thing, like I've got my plans seem to work, and my whopping extensive trades of I think I've got like 7 trades to my name. But the thing that the 2 things, one was position size. I was gun shy on my losing trades position size, the amount of money I should have been trading. I went under the recommended sizing. And then on the, or what's it the other way? Yeah. And then on the one, the winning, no, I went bigger on those, and then I went smaller on the big winner. And it was the other way around. I did the big winner first, and then the following trades, I was kind of like gun shy on that. So instead of putting enough in to make a difference when you win, it didn't even, I lost all my winnings on the other ones. I sized it opposite of what you should have been doing. I should have been putting more money in. I don't know. That was, again, that's a psychological thing. I just ignored it. I got the number. That's what I should trade. I'm not going to trade that though. And I did something else. And the other thing was I got into the last losing trade, which I guess there was a few of us that had seen your Wahoo got up with me after I said, but I ignored one step in the plan, which was, to me, it's like one of the biggest ones was the market breadth. And I jumped in anyway. And paid for it. So, yeah. So I think now going forward with the plan, I mean, I'm just going to trust the position sizing, and because it would have worked out. It just would have worked out, and I probably would have had. I would have definitely had more cash on the table. So anyhow, that was kind of I don't know if it's just a newbie thing, and I'm looking at the chart and it's saying, here's how much you should put in there, and I'm like, yeah, maybe I don't know if I want to do that.
We're actually going to cover something like that in just a little bit in the slides. It's super common, right? It's super, and it always turns out to be your position size is too big on your losers and it's too small on your winners. That's always how it works out. That's the law of the universe in trading. But
that was me, yeah.
But then again, let's say that you had been trading 1% forever, and you're like, you know what? Chris says 5%. I'm ready to go 5%. And that 5% happens to be a loser. That sucks. That hurts. But we can't control the outcome of that. We don't know if it's going to be a winner or a loser, right? And it is just as likely to have been a loser at 1% versus 5%, which means the next one is just as likely to be a winner at 5% as it was at 1%. So I've seen this before. I saw it in the Discord. Somebody talking about how they lost all their money on a single trade, and it's like, well, that's a position sizing issue, my friend. I mean, like legitimately, that is all position sizing right there. And he's like, well, I just scaled it up, and I'm like, well, okay, that makes sense. If you happen to catch a loser on your first one when you scale up, it's not your fault. It would have been a loser anyway. You just happen to catch it on the random distribution of wins versus losses, right? So that doesn't mean you did anything wrong. It just happened to have that outcome. So don't stress. I really appreciate you though.
Yeah. And I want to say one other thing on the video before you jump on. One thing that really jumped out at me, there's a lot of stuff that I saw everybody made the same comment on in the video, but it said each trade is unique, but it said all prices are people-generated events, and that really just jumped out at me. When you're looking at a chart, it looks mechanical and it looks like some kind of just digital information, but I mean that's all. It's emotions that are on the chart is basically what you're looking at. So I thought that was kind of unique.
That's a great observation, dude. It's exactly this, isn't it? Right? It's exactly this. More people screaming live, or more people who can scream louder is really what the outcome of the movement is going to be. Who can scream louder? And it's at some point the buys are going to start slowing down and the sells are going to scream louder, and then vice versa. It's just how it goes. That's how the market works. So yeah, great observations. JC, how about you?
Yeah, man. I'm starting at the very, very lowest level. And believe it or not, I had mixed I knew when to get in, but I thought the when to get out was the when to get in on the shorts.
Oh.
Oops.
Dude.
And so Deep Thought, who's been heaven sent, I mean, this dude here is like my lifesaver, gets on the phone, and in like 10 minutes, he goes, no. This is what it is. I'm going, got it. Golden ticket, blue box on the left. Learn that.
Yep.
So it's now repetition.
Listen, I did the exact same thing in 2021. That's why was it 22? It was 22. The exact same thing in 22. Like OVTLYR was fresh. It was new. It was something I was experimenting with. And when I saw a sell signal, didn't matter where the market was. I was like, okay, that means the short, right? And I was losing my ass. And I'm like, why does this continue to happen? So I had to take a step back and I had to say, wait a minute. Sell signals don't necessarily mean sell to short. They really mean sell to close. So JC, I actually had the very similar observation that you just had not all that long ago, really. So you're in good company, dude. You're doing it awesome. I'm proud of you.
I'm good. And thank you, Richard, my man.
There's nobody named Richard.
All of you guys are awesome. And let me tell you, it's comforting. I'm not nervous. I mean, I get frustrated a little bit when I don't know what's going on like everybody else, but I'm like with family, everything's gonna be cool. Don't worry about it. You got people here that got your back. Easy, relax.
There we go. Everybody fist bump. I like that idea.
Yeah, thank you all. Thank you.
That is great to hear, because that's our objective. And I say this every day. We say this every day, right? Save time, make money, start winning with less risk together as a team.
Yep.
That's what we're doing. So it's great to hear. All right. Let's get into today's lesson. It's going to get deep. There's quite a lot of slides on this one, so I'll try not to take too long. But on trading psychology, I actually went to a psychologist for months working on this. Okay. Like I sat in the chair, I did the whole thing, tell me about all these traumatic things in your life. How does that relate to your outcomes in your trading, blah, blah, blah. I did all that, right? There were 3 things that I really struggled with. The first one was not sticking to my trading plan. Probably sounds familiar to a lot of people, doesn't it? I think a lot of people are probably shaking their heads right now, right? Not sticking to my trading plan. And I should have known better many times over. And in fact, I remember having that conversation with Larry Hite, first $1 billion hedge fund manager, one of the original market wizards. And he's like, listen, Chris, if you don't stick to your plan, what was the point of making the plan in the first place? I mean, you might as well just throw it out the window, because if you can't stick to your plan, you have nothing. You literally have nothing. It's just as good as guessing. All right, Larry, that makes a lot of sense. Yeah, Joe, what's on your mind?
And that's exactly what I did, as I described with my futures trading. I was like, this plan could be perfect, but if I can't follow it, I should not do it. So I'm just going to quit. And it has worked out, because here I am.
Yeah. Oh, yeah, for sure. I mean, when I was in the psychologist's office, he gave me a whiteboard and I love to draw. I don't love to draw, but I love to like mark down notes and stuff. So I'd be like, okay, this is where I get in, this is where I get out. Man, I'm such a genius, right? And he's like, so why didn't it work? Like, because I didn't follow the plan. He's like, yeah, well, there you go. Whose fault is that? Mine. Who can change this? Me. What's the problem here? I did like that about him. He gave a lot of personal authority, right? A lot of personal agency. That was the word he would use. He's giving you agency, giving me agency to fix the problem. I created the problem. I can fix the problem. I'm the one who's clicking the buttons. And same thing with you guys here and you guys watching. You can fix whatever problems you have with trading. You really can. But it's up to you. You need to have the personal agency to do so. The second thing that I remember working on with him was basing my personal worth on the outcome of the trades. Boy, I tell you what, if I was having a losing streak, everybody knew about it, right? My kids knew about it. My wife knew about it. I hung my shoulders low. I was letting everybody see the top of my head, how I only had 40% of my hair left because I couldn't look anybody in the eye, right? And it was miserable. And when I was on a winning streak, bro, you knew that too. It's like, all right, let's go out to a fancy restaurant. I need to go buy some fancy watches, right? It's all that stuff. Everybody has that boom and bust cycle at some point until they figure out, probably shouldn't be like this. And so I really based my personal worth on the outcome of my trades. But then that's one of the things is it's like, you are not a good person or bad person based on your trade. You are not a weak person or a strong person based on your trade, right? Some people might go from that aspect, right? It's all about following your plan and knowing that you're going to have losses. You're going to have wins. And those losses and those wins do not determine who you are as a person. That was a real struggle for me. It may not have been for you guys, but for me, that was a real struggle. And then the last thing that we worked on was repeating the same mistakes over and over. Man, I tell you what, I was really embarrassed when I had to text him and say I blew up my account the second time. Because it's like, really? How did we get here? Well, see, what I thought was, what should have happened was, all these things, it's all outside forces, but in all reality, it was me repeating the same mistakes. Whose fault is that? My own. Right? That's why I say, as great as this game is, I don't see anybody talking about trading psychology. And the people who do, it's boring AF. It's not sexy. Right? Nobody cares about trading psychology, right? Trading psychology is so important because 90% of people blow up 90% of their accounts in the first 90 days of trading. This right here is not something that I made up. This is well known in the industry. This is why trading platforms trying to get as many new people as possible because they know only 10% of their customers will be here in 6 months. That's why they have to rotate and entice you to come and for every reason they can to keep you as long as you can because you're going to blow up your account. Statistics are you are going to blow up your account. Now, realizing that, we have to understand we have to do the opposite of what 90% of people do, right? And the thing is that they're just doing the normal thing. We are not normal. We cannot be normal and be successful in this. If you want to be normal, you're going to blow out just like everybody else does. Okay? Keep that in mind. Everybody else is doing the same thing because that's the normal thing. You cannot allow yourself to be that, right? If you want something you've never had, you must be willing to do something you've never done. I love that quote. And that applies so much in trading. So much in trading. Let's go through here. What I want to know is, do you guys have some stories of anybody who blew out their account, right? I want to hear, and I guarantee you, it was all psychology based that they blew out their account. For me, it was thinking I was a genius in the 2016 election that, and I know I've shared this story with you guys, thinking I was a genius in the 2016 election, set up this exotic options trade, thinking that I was a genius. And by the end of the week, I had lost 2/3 of my account in the week because I did not know what I was doing. Thought I was a genius, clearly wasn't, right? And then the second time I blew up my account, gold was trending down, and I was following this person on social media who said, this has to be the generational low of gold. It's going to go up from here and it's going to go up so much. So of course I levered into everything gold related. I bought every I bought every call on every ETF that was gold related, even tangentially. What happened? Gold didn't go up at all. It went down and down and down. And that's when I was at Disney World looking at my phone thinking, what a genius I am for blowing up my account the second time. Right? I've been there, I've done it. And I like to share those stories because it makes me relatable. Right. I've been there. I've been through those nightmares. But you don't have to do that. You don't have to repeat the same mistakes I did. So I want to hear from you guys. Do you have any stories of anybody else? It doesn't have to be yourself unless you want to share.
Yeah, not anyone else. But yeah, I blew up 70% of my account in one trade, bag holding.
How did it happen, Deep Thought?
Just bought in at a low price, watched it rocket up, and didn't know any of the exit rules. Didn't plan anything, and that was it.
You didn't have an exit plan at all on it, did you?
It should come back. It should come back. It didn't come back.
Yeah. What about you, JC?
I didn't understand how it happened, but I had a roommate who was a chiropractor that got into the stock market, and he had a run. Had about started with, I don't know, $20,000, got up to about 130,000 over like a year or two, and he was feeling large. I don't know what happened, but he went into a deep depression. I said, "What happened?" He says, "I blew my entire account in 6 hours." I said, "Ooh. What do you mean your entire account in 6 hours? How does it happen? Do you have anything left?" He goes, "No, I blew all of it in 6 hours." I guess he put on some calls and they were due. And the man came to collect. Zip. Something high, very, very high stake. He thought he had it made. He was on a winning streak. So he says, okay, here's where it's going to go. I'm all chips in. I'm going to do what I've been doing for a year. That's got me, 300, 400% return. And I'm going to go in and I'm going to retire. And they retired his ass.
Wow. Position sizing. I mean, legitimately, that was it. He could have been completely wrong in the trade and survived.
Of course.
But it's all position sizing.
Yep.
Dave, what about you?
I'm going to throw this one out here, and it's not a blowing of the account, but it's a blowing of the trade. If you go back 6 months, I was deeply into intuitive machines, Lunar, L-U-N-R, and watching that thing go up and up and up, and it just went up like a rocket ship. And I kept telling myself, really time to get out. If I have the desire to take a picture or a screenshot, it's probably time to cash out. Simple, easy analogy for everybody listening. If it looks good, sell it. Well, it went up and up and up, and it came back down, and I took what would have been, and I'll throw numbers out here, what would have been $150,000 gain on that stock. When it cycled back down, I kept going, wait a minute, it should go back up. We're getting close to launch. We got good things. It should be doing something else. And instead, thankfully, I still had a very sizable profit left over, but it was not a six-figure profit by any means. I ended up leaving because I kept waiting and waiting, and it's going to turn. I took really $100,000 loss on it. I mean, I got lucky. I came out with 50 grand. It was a fantastic investment. It was a 200% gain in 6 months. I mean, it worked, but it could have worked so much better had I followed my rules, had I just paid attention, not questioned, and just said, hey, look, time to come out. Instead of, maybe it's not 25, it came back down to $22 a share, get out, But no, I decided to ride the damn thing down for a ways.
Let me ask you, Dave, when that happened, did you have that sense of, it should go back up, right? Well, it hit 25. It's going to go back up. It's just a blip. It'll go right back up, right?
Yep. I was listening to a lot of people online. I was, saying, oh God, no, this has got a $35, market cap. If you run it all in, this is where we should be right before launch. And I'm like, gee, launch is only a week away. Why aren't we going from 25 to 35 right now? Listening to the wrong people and not trusting my gut to say, get out. And there's times if it just looks good, just get out. Green
How
is green.
how uncomfortable were you feeling as you saw those profits stacking and stacking and stacking?
I was starting to feel pretty uncomfortable. I had already rolled several of my options. I had some leaps that I bought for pennies on the dollar. So I mean they were way in the money. And I kept rolling them. I kept pulling money out. I kept doing that, trying to protect that. But I was also heavily on the stock side. So again, I can't roll it. I can't do anything with it. I just got stuck. But yeah, I mean, it started making me feel more and more uncomfortable because it was unprotected.
Yeah.
It's sitting there in the account. It looks wonderful, but it was unprotected.
Yeah. It really is difficult to sit on those gains as they go up and up and up because every day you log into your account and you're like, is it still there? Is it still there? Is it still there? Right. Every hour that goes by, it hasn't gone down yet, has it? Right. And there's huge nervous energy around keeping profits. And I think that's one of the reasons why people are so quick to take their profits off the table is they can't stand that nervous energy. I got to take it before the market takes it away from me. Right. Rather than, okay, it's going to do its thing. And once I get my exit signal, we're going to get out. Now, this reminds me of a couple of weeks ago when we made all that money trading. And I saw on the Discord so many people flipping out. They're like, oh my God, every little tick, every 1 penny move, it worked against it. People were like, I sold my position. It's like, what are we scared of here? Right? We all understand the market moves. No question about that. So why are we concerned if it ticks down and doesn't hit an exit signal? Is your exit signal just to be, a scared rabbit, a scared rat, right? Just like, I gotta go. I mean, that's not the way to trade. That's not the way to make money in the market. That's for sure. So let's continue on here. I really appreciate you guys' stories. Now, trading psychology is not sexy. It is not exciting. It is not fun, but it is the only way you will be a successful trader, period. So I know this video is not going to get nearly the amount of views, but this video is worth 10 times more than any entry and any exit signal because none of those entry or exit signals matter unless you have the right trading psychology. So we have a buttload of biases, and I'm going to go through each one of these. We as traders have so many biases, and I put this into ChatGPT, and I'm like, what are some common biases that traders have? Loss aversion, confirmation, overconfidence, recency, hindsight, anchoring, time bias, status quo bias, belief perseverance, gambler's fallacy, hot hands, sunk cost, FOMO, ego, trend neglect, outcome, herding, narrative fallacy, pattern recognition, illusion of control. Oh, we're not done yet. Disposition effect, defensive attribution, resistance to change, and emotional reasoning, right? You got to deal with all this shit every day. You have to get through all of it to be successful. So it's not easy. It's not easy. And that's why not everybody can do it. That's why 90% of people cannot do this. So we're going to go through each one by one. And I'll try and share with you stories that I have that I've learned during this process, because I feel like we can all learn through stories. And if you have a story, please do me a favor, raise your hand and I'll be glad to call on you. So first is a loss aversion bias, right? The pain of losses feels way worse than the pleasure of equivalent gains, right? Like to Dave's point earlier, right? The pain of losing those profits is worse than the fact that he actually got to keep some profit out of it because it hurt so much. And a lot of people cut their winners short. They hold their losers for too long, and fear is way greater than logic. So how do you beat it? You follow your plan with consistency and discipline. Now that's the hard part, right? That's the hard part, is waiting for that exit signal. Waiting for that exit signal. Next, confirmation bias. We talked a little bit about this one in the video we talked about this morning, right? It's where you're going out and you're seeking information that supports your belief and ignoring what contradicts your belief. I'll give you a couple examples. Have you ever put on a trade and then you immediately go on Twitter or you immediately go on YouTube and you immediately search for that stock to see what other people are saying about that? I totally have done this. Okay. I have done it for sure. Mainly I was doing it because I'm not to sound like a salesman here, but the outlier signals were so good when I started like making money on them. I went out on the internet, like, does anybody else know about this stock yet? and nobody was talking about it. And I'm like, whoa, this is cool, right? Nobody was talking about it yet. So there was no confirmation bias. And then a couple days later, the outlier move starts happening. It's like, okay, this now we're cooking with fire. I like this. Right. But a lot of people go out there and they cherry pick the news, right? We've covered a few channels on this on our YouTube videos where it's like they only talk about one stock and they only talk about the good things about that stock. And that stock has to go to this price target by the end of the year, no matter what. And it's like, yeah, I don't know about that. It's just justifications for staying in bad trades, right? So how do you beat it? First, you unsub from all the noise, right? Get off the Twitter, get off the YouTube channels, and focus in on your plan. Because your plan is the only one that matters, right? You can find any YouTuber out there who's going to pump a stock just because he can, but that doesn't mean you need to go out and listen to what he's saying. Have you guys run into any of this before? Yeah. Ian, do you want to share a story?
Yeah, I'm just thinking, Siri and Google are listening all the time. And the confirmation bias is in your search. It's just they're giving you what you want to know. So,
That makes a lot of sense.
yeah, it happens all the time. We were talking to my daughter's friend about F1, and she knows nothing about F1. And then the next couple of days, all this stuff came up on her phone about F1, and she said, "What the hell's going on?"
Yeah,
The phone was listening, man. It was telling you what you want to know.
good point. I hadn't thought about that before.
Yeah.
All right, let's go to the next one here. Overconfidence bias, right? Let me move this up. All of our big fat heads are in the way. There we go. Overconfidence bias. Overestimating your skill, edge, or ability to predict the market. Oversizing trades, ignoring stops, and revenge trading. That sounds exactly like what happened to JC's friend, right? He got so confident that he knew what he was doing. Dude just levered to the tits. Boom, blew it up, right? So how do you beat that, JC? How would you beat that?
I think you said it, position sizing. Number one. I mean, you can be all the confident you want, but you got to protect your ass.
Yeah.
You can't go all chips in, house, kids, and everything here because I'm so confident. Because all it takes is 1%, and you're done. And when it happens to you, it doesn't happen to you 1%. If you're that 1%, it's 100%.
Yeah.
You
Oh yeah, dude.
So
And-
conservative.
And a lot of people who catch like an early early winner, there's something like that. What do they call it? Beginner's luck, right? Somebody catches beginner's luck and they get 2 or 3 trades on and they win and they're like, oh my God, this is so easy. And then they're gone by the end of the month, right? Because they're like, but it was so easy before. I didn't have a plan. I was just buying the stock that some YouTuber was talking about and he was right. And then I was right. And then I stopped being right. Now I have no monies left. Brad, what's on your mind?
Yeah, revenge trading. That is one of my biggest, things right there. When I first started, if a stock would take money from me, I'm on a mission to get that money back. It's a zero-sum game, and I'm hyper focused on that. No matter what the signals are telling me, like, hey, stay away. You don't need to be trading this. I was pissed and I needed my money back. So that's what I would do. I would just start revenge trading, and then oversizing it. Okay, I lost X amount, so I'm going to double that and see if I can get everything back, and that's basically how I blew up my account. Was revenge trading.
I was about to ask what happened next.
Oh yeah. No, that's how my account was going. So
yeah. Thank you for sharing that. Recency bias, right? So we've covered how many so far? 1, 2, 3. We're only on the 4th one so far, and we all have stories that we can say make sense. And like I said, we got to get through all of these. JC, what's on your mind?
When I started this, I didn't want to read P&Ls and I didn't want to do any of that, but I did that. I was on the calls with Palantir. I was on the calls with NVIDIA. I did my due diligence, as much as I could. Everything looked great. So I went not all in, but I went in heavy because I was all enthusiastic. I did the homework, everything, not the outlier 9, but everything you've been told to do, I did. and following what's his name, Jeremy, I think it is. You know, following him, not only him but all the other guys. I'm going, all right, learn this, learn that, bam, bam, bam. Okay, did it. That's when 15 calls went to shit. 15 calls went out, and all should have done well. And if not, at least 13 out of the 15. Nothing. That's when I came across you and you said, it's math. It's math. And I'm a math, I'm an engineer. So I got a minor in math and minor in physics. So I'm about vectors and numbers. They don't lie. I'm like, okay, I'm done. I got the system that I need. Yeah. So for those that are listening to this, that think that you have to learn, when you said, I don't care who the president is, what the numbers are, what the PE, I don't care about any of that. I care about the math. If the math says it's going up, it's going up. If it says it's coming down, it's coming down. And I don't care what the president says when he gets on a call and whatever. I don't care. I'm going, perfect. Yep. That's what sold me on it. Perfect.
Dude, I appreciate you sharing that. Because I mean, I had never was one to sit and say, oh yeah, let me go jump on these phone calls, right? It never made sense to me that people would base their trading and investing decisions on 4 days a year, right? On quarterly earnings announcement, yet they ignore the other 300 trading days a year. It's like, I don't know, it just feels like we're missing a piece of the puzzle here.
Chris, they believe in the product, and because they believe in the product, confirmation bias. They're looking for anything that anybody says that validates their love for the product. I experienced that with Elon Musk because I kind of like the guy. I like his ingenuity. He's a genius. So you want the thing to do well. You want him to do well. You want, and that takes you there. So as soon as he says anything, you go, aha, see, it's going up. And that's what it is, man. It's your love for the product. And then you go into confirmational bias, and anything that remotely confirms your feelings, you attach yourself to.
Yeah. And that makes sense. And that's why it's one of the things that's so hard to get over, right? That confirmation bias right there. Let's talk about recency bias. Oh, who's jumping on? I didn't hear. Mike, go ahead.
I was going to say, you see a lot of what JC was talking about right in the Discord. You'll see a lot of people fishing for, is what I'm doing okay? Is this, I mean, there's a lot of, we're just searching for that, and that's just got to go by the wayside, I think.
And I think that comes down to like being not necessarily immature, but not confident in your plan, right? Yeah, I don't give two flying monkeys what you guys think of my plan, right? It's my plan. I'm going to roll with it, and I love it when people try and tell me how I should do this or I should do that, because it's like, bro, I didn't ask. I don't care, and it's not going to change anything. Now, I will say, only recently did I learn about SGov, parking cash in SGov rather than parking cash in an unearning account. That actually was a good enhancement. I appreciate that. But other than that, that's been the only YouTube comment that's ever made a difference ever to me. So let's go to recency bias. Giving more weight to recent outcomes than the bigger picture. So something like thinking a hot streak means you're on fire, or a losing streak means your strategy is broken. Now, if you have a 70% win rate, legitimately speaking, every single trade is random between having a winner or a loser. The distribution of that 70% cannot be controlled. So you could literally put on 30 trades in a row of losers and have 70 trades in a row of winners. Both of those two streaks, one streak, you're going to be like, I am such an idiot. I can't do anything. My strategy's broken. Oh, this is the worst. I have to change everything. The other one will make you think, oh, I'm such a genius. I can't lose, right? Both of those recency biases are going to cause you to oversize, to take unnecessary risks, probably put on trades that don't even fit your trading plan. How do you beat it? Understand that every trade is unique and the distribution of wins and losses is random, right? Can you get on a hot streak? Yeah. But that doesn't mean that you created the hot streak. That means your strategy clicked at that time, but you as a person, you didn't move the market to achieve your outcome. All you happen to do is catch the wave and ride the wave. Hindsight bias, right? Believing the outcome was obvious after it happens, right? This is the Monday morning quarterbacking, right? It undermines your learning. It makes you blame execution instead of recognizing randomness, right? So backtesting and creating a plan shows a positive expectancy, and then adjusting it as needed, right? Because every year that goes by, I've made little tweaks here and there to make sure that I can account for one thing or another, one new circumstance that I may not have thought of, and it continues to get longer and longer. And Minervini still does the same thing, and he's been trading for like 50 years. And you're going to be doing the same thing too, right? So looking back is good. You've got to look back and recognize what was going on, but don't look back like you've done something wrong. Look back and say, okay, I can learn from this. I can move on, move forward, and make it even better next time. Next, anchoring bias. I think this is extremely common. Oh, go ahead, Mike.
On your, it says, wait, did you already change slides?
I did. Let me go back.
Oh, yeah, go back. Yeah, there was something on, since recognizing randomness. So is it saying you weren't wrong? It's just a random act, or I mean, or am I misunderstanding what that's saying there? As far as, I hate to blame it on just randomness if I did do something wrong.
Well, taking it
You
personal,
blame
right?
execution.
So focusing in on executing the plan, but not saying that like we understand it's going to be a random win or lose. We don't know if it will be a win or lose. And over the scope of 100 trades, it'll get pretty close to your average win rate, right?
Okay.
So we need to recognize that random distribution is right there in front of us. We can't go back and say, well, it's such an obvious thing. I'm such an idiot, right? I mean, taking it one step at a time, reviewing those trades and seeing where we can learn from them. That's what I think it means.
Okay. Yeah, I was just trying to wrap my head around it. Okay.
Yeah, for sure. What's up, Ian?
Yeah, just on that, Chris, being an Aussie, we sort of bet on anything. Flies crawling up a wall, you know, and with chew up and things like that. We believe in the odds. Everyone believes that there must be, the odds are in your favor if 20 have been this color and 10 have been that color. And it's a mind-blowing thing to find out that that's just not true. It doesn't exist. And that really blew my mind when I realized that. I thought, okay.
Oh yeah, the gambler's fallacy is
got to
coming up.
rethink stuff.
For sure,
it just
gambler's
doesn't
fallacy,
exist.
exactly what you're talking about. That's coming up.
Yeah, it is a fallacy. Yeah. Okay.
Anchoring bias. Now, this one drives me absolutely crazy, especially because of the YouTuber space, right? When they're like, oh, SoFi has a price target of $35 by the end of the year. All the analysts have put a price target of $35, right? And it's down to like 17. And you're like, well, that makes sense. I have to buy it now. If their target is $35, then if I don't buy it, then I won't double my money, right? Now, if it's an analyst or if it's you creating a price target, whatever the case is, there is every chance in the world it doesn't even get close to that. So then you're stuck holding on to this trade saying, well, my price target's $35. And if it doesn't go from 17 to 35, that's fine. I will wait it out because that's my target. What are you doing, right? You get stuck on your entry price. You get stuck on your analyst target or any past trends or even like current or past highs, right? So if it like on Dave's trade, right, the $25, right? If it doesn't go back up to, or it must go back up to $25 because that's what it did before. It can do it again. And of course, I mean, it's trending down now, but that's okay. It's a buying opportunity for when it goes back up to 25, right? Like we got to understand that. So how do you beat it? You just completely remove the targets. Take off the targets. The targets do not matter. The targets are completely arbitrary. The market gives no monkey donkeys. If you have a target of whatever dollar amount, doesn't care at all. It's going to make you it's going to make you follow your plan, or it's going to make you completely abandon your plan. And the choice is yours here. I would say follow your plan. And when you get the exit signal, no matter what the target that, or no matter what the price it reaches, that's when you get out. Otherwise, you could be stuck on it for ages. Go ahead, Joe.
I used to have analyst opinions in my trading plan. And what I found was it would just tell me what I already knew. They would drop the price if the price was going down. Like, just look at the chart. So they're not on my trading plan anymore.
Dude, for sure. Yeah, it analyst targets are so frustrating because I have been in a trade before. I think it was a week ago. And then some analyst came out with his target and revised it down. which of course took me out of my trade. And I was so pissed. I'm like, bro, stay out of this is my lane. Go in your own lane, okay? Leave my trade the hell alone. So, and I had, what am I going to do now? Wait for another price target to come along that meets the one that I want to see? No, you got to follow your plan. But I think this is a super, super common one, anchoring bias. Next, time bias. Valuing short-term gratification over long-term goals, like taking impulsive trades or breaking rules so you feel active, right? How many of us, I felt this way, so raise your hand if this happened to you. Feel like, well, maybe not now, but at some point, felt like if you weren't making trades, you weren't a trader, right? I know for sure I felt that way. If you aren't putting on trades, if you're not doing something, you're not a trader. Well, sometimes the best trade is cash, right? Sometimes the actual very best risk-free trade that you can get is cash. So how do you beat it? You sit in cash and you don't F up. And as Mark Minervini would say, wait in cash for proper setups as long as it takes. Sometimes that can be weeks. Sometimes it could be months. But it doesn't mean you have to do anything, because you as a trader are thinking risk first. A successful trader that's going to stay on, you're looking at it from a risk first perspective, and there's too much risk. So the only thing to do is hold cash. Status quo. Preferring to maintain the current situation, like a trader fails to adapt to strategy when market conditions shift, right? So you stop using the word should and you listen to what the market is telling you. So for example, you fail to adapt your strategy when the market conditions shift, right? If we're in a bear market and you're buying calls because that's what you've always done, you're just going to lose money hand over fist every single day, right? The market went up in 2021. Lots of people, including myself, made lots of money. The market went down in 2022. Lots of people thought that they could do the same thing in 2021, in 2022, and had the same outcome. But it wasn't the case. The sellers were overwhelming the buyers everywhere that year. And the people who thought that they could maintain the status quo, they didn't make it to the end of 2022. They were gone. Belief perseverance bias. Holding on to a belief even after it's been disproven. So what do I mean by that? Refuses to exit a bad trade because they still believe in the setup. They still believe in the stock, right? For example, you got your stop loss hit and you're like, it's okay. I'm going to give it another 50. This was me. I'm going to give it another 50 cents to find out if it's right. Of course it wasn't right. It continued down. I'm going to give it another day. Of course that didn't help. It continued on down. I'm going to give it just another $1. What happened? It continued on down. Day after day after day. And I'm watching my account losses grow and grow and grow because I couldn't overcome the bias that I had that it was going to go back up, right? So even after I had been disproven that it wasn't going to work, I still couldn't do it, right? So it's kind of like this. How do you beat it? Grow up, right? Like the psychologist told me earlier, this is your fault. You can fix this. Grow up. You still don't believe in Santa. Santa's been disproven. Why do you believe the stock is going to go back up? It has shown you it is disproven.
Them's fighting word.
Listen, I'm trying not to say it too loud. My kids are home for summer, right?
Okay. What do you mean there's no Santa? What?
Oh, sorry to tell you guys. So I'm sorry that the OVTLYR University had to lay that one on you. Gambler's fallacy. This one I think is kind of like what Ian was talking about earlier, right? Believing that past events affect future probabilities. So it's like you went to the roulette table and you bet on black 3 times, and each time it's come up red. So you're due for a win on the 4th one, right? I can't be wrong. What's going to happen? You're going to continue to lose, and you're going to probably continue to revenge trade, like Brad talked about earlier, doubling and tripling the position because you have to get your money back from the stock. Yeah, I know Santa's not real. I'm sorry, guys. How do you beat it? Understand that you cannot control the outcome of the trade, no matter how badly you want it, right? Yes, you can sit there and you can do the secret, right? You guys know the secret, the law of attraction. You can channel all that good juju, right? all that good all the good karma you've been putting out into the world, right? You can have some incense going, and you can visualize the outcome of the trade being so much more in your account. You're going to be visualizing what color your Lambo is, and you're sitting there and you're meditating, and you just see all the profits coming into your bank account. But it ain't going to happen. All right. Even if you want it more than anything, even if you just got off of 10 losers in a row, that doesn't mean you're due for one. The odds will play out. And like I said earlier, you could literally go 30 losing trades in a row and still have a 70% win rate.
Yeah.
Nobody owes you anything. Hot hand fallacy. Believe that recent success increases future success odds, right? It's kind of like we were talking about earlier when you get that Midas touch, right? You think you can't go wrong. They size up irresponsibly after winning a few trades. Stick to your plan. And this is hard when you feel like you have the Midas touch, right? You come off a string of good winners and you're like, oh man, this is how it's done. Okay, cool. I'm gonna size up, I don't know, 3 times bigger than normal. Like Mikey Mike happened to do. That's the one that takes you out. No offense, Mike, but that was a perfect example, dude. Sunk cost fallacy. I think this gets a lot of people. I think this gets a lot of people in a lot of trouble. Mike, he's going to defend himself.
No, I was going to add to the, some of the wonderful moves I made. When I did start trading it was hard to get out of cash because I had it in a nice account, and it said the status quo. I was kind of digging watching that grow every month, and I was like, oh wow, we're actually going to trade now. I don't know if I want to pull any of this money out. So it was kind of hard for me to even go there on that first trade. So anyway,
yeah, that makes sense. I get that. Let's talk about the
when
sunk
the
cost.
money goes.
Now, there's one YouTuber in particular, I won't name names, but he happened to buy a stock called the Tattooed Chef. And this particular stock went down and down and down. And dude clung to it publicly. And he talked about how he lost $3 million on one single trade. Because he's like, you know what? We watched the video where he did it. He talked about, I'm going down with the ship. Right. I'm invested this deep already. I can't get out of this where we are now. Because what if it comes back? What if it comes back? Because he's invested so much time and energy and money into it already. I mean, how could he ever give that up? How could he actually step out of the way and say, I was wrong? And what happens what happens to your account when that happens? I mean, it's just going to plummet. The sunk cost fallacy is a huge reason why I think a lot of people really struggle, right? So stop trying to tell the market what it's going to do and start listening to what it's telling you. If you have the 10 under the 20, price under the 50, that is categorically, mathematically, undisputedly a bearish trend. And if you're still holding on to a stock and it is in its bearish trend, you're just asking for trouble. Right? That is an amateur move. You're not listening to what the market's telling you, and it's going to cause you to lose your bankroll.
Chris, before I joined OVTLYR, I didn't really know much about the moving averages, and I had bought AMD when Kramer recommended it. I can't remember what the price was. It was 150s, 160s, and I ended up bailing in the 140s, and it was pretty good sized loss. And it was, if I knew how to track the averages, just that those simple indicators would have let me know, hey, it's time to get out. But I hung on to it because there was a loss.
You got out around 140. Is that what you said?
Yeah, I believe it's like 143 from what I remember.
Well, dude, didn't it get down to like 70? I think you made the right choice.
Well, yeah. I keep looking at it to tell myself how lucky I was to get out when I did.
Yeah, you're right, dude. But then there's people who they see that they could have done this, right? They could have got out at 140, and they look at it now when it's at 113, and they're like, I mean, if I had only hold on to it, then I could have bought so much more at 113, right? And then they're adding to their losers, and then it just gets worse and worse and worse. Then there's FOMO. Listen, at this time, I need everybody in the chat to write no mo FOMO, because that is how we operate as outliers. Everybody in the chat right now, type no mo FOMO, because this is how it's done. This is what you will have to do in order to stay in the market, right? It's not fun. It's not sexy. And it's really hard. So many people they see one move, one day. Here we go. Actually, I'll show you an exact example. It was a SPY.
Look at hymns
Here.
today.
Hymns. No mo FOMO. Thank you for that one, Paul. Hymns. There are people who FOMO'd the shit out of this trade today. Right? There's people who FOMO'd into Tesla and rode it all the way up 120% and then all the way back down. And I saw people going ape shit crazy FOMO on this one move in SPY. I got the worst troll comments I've ever seen on this itty bitty move. This move right here. And it's like, yo, FOMO is so real. FOMO is so crazy real, right? You cannot let FOMO overcome what you're doing, right? Cannot overcome FOMO. Susan says, look at Hood. Hood was one where we made some great money on it. What's going on with Hood? Hey, I think a lot of people are going to start FOMOing into Hood. Who knows what's going to happen there? We've already taken our money out of it. We moved on, right? Could you have still held it the whole way? For sure. But now people are going to be getting excited about on this side where we already made 96% in 3 days over here, right? This is the 80% in the middle we talk about. This is the bottom 10%. This is the top 10% that are the hardest to make the money on. So we'll see with Hood. I don't have any idea what's going to happen with Hood. I don't care because it doesn't fit my trading plan. It's that anxiety over being scared to miss a big move. They chase breakouts too late. They skip their processes. They don't have a plan. So how do you beat this? Number one, create a plan. Number one, just create any plan. Number two, focus on that plan and turn off everything else, right? I don't know what's going on with hymns. I don't know what's going on with Hood. I don't know what's going on with all these stocks because I don't care. They don't fit my trading plan, so I don't look at them. There's no sense in looking at these trades or at these stocks because I have no reason to. Next, ego bias, right? Letting your pride dictate your actions. Now, how many of us? I think we probably had some good examples. How many of us got into a trade? Tesla's a perfect example. How many of us got into a trade? I'm not saying we got into this trade here in Tesla, but you held it all the way up thinking you were such a genius. And then it comes down and it comes down and it comes down and it comes down, but your ego won't let you get out of it, right? You're like, but I was so smart a couple weeks ago, right? Here's the thing, right? At this same price, this 371 price in December or in February, on this side, you feel like a genius. And on this side, you got a lot of anxiety, a lot of fear, a lot of uncertainty, but it's the same price, right? It's the same price. And your ego says, well, it just went up that high so much earlier, right? To 482. I mean, it's only down $100 from there. It's bound to go up at some point, right? You're mixing all of these different biases together. Avoiding your stops, not admitting to being wrong, won't take your small losses. And it sucks to have a loser because you're admitting defeat, right? Not only do you lose money in your account, right? So with taking losses, it's more than just losing the money. It's admitting defeat. It's having to acknowledge the fact that you were wrong. And that's okay. But a lot of people can't allow that to happen. They can't be wrong, right? And it goes back to like grade school, right? When you miss a question, right? It doesn't feel good because you're wrong. In this case, it should feel great if you're wrong because you get out of the way before it starts working against you, right? You can choose to admit defeat when it's small, or you can choose when it's an overwhelming loss. And in all reality, the choice is yours, right? That's that personal agency we talked about. The choice is yours. What's up, Ian?
Yeah, I had the opposite with that Telstra trade. The earnings, about 3 earnings back when it was green. I got out just before the earnings, and then it just rocketed up, and my ego was that shattered that I couldn't get back in. It was crazy,
dude. Yeah, exactly. The ego works both ways in that case, right? Trend neglect bias. I didn't even know about this one. Trend neglect bias. That's what happened to me when I was like, I'm smarter than the downtrend in gold. I'm not going to look at it, right? ignoring the strength of the direction of the prevailing trend, right? Tries to time the top and the bottom, right? Tries to get the top 10%, the bottom 10%, rather than the juicy 80% in the middle, and entering against momentum, right? I guarantee, with no doubt whatsoever, there were people shorting Tesla at every single candle all the way up here. And then at the same time, there were people buying Tesla on every single candle all the way down here. Both of those are exactly this, right? Trend neglect bias, ignoring the trend, the direction of the trend. Now you're probably thinking, well, Chris, of course, the people who shorted it up here, they made money, right? Months later, December to February, how about we just get on board and get paid, I don't know, the next couple days, right? If you're shorting it here versus shorting it here, or buying it as it's going up versus buying it here, it just makes life so much easier. That's what you're looking for. You want to get to profitability as fast as possible, hopefully by the next day. I mean, legitimately, your goal is to be as profitable as fast as possible and to get out and move on to the next one. That is your goal at the end of the day. If you're sitting on a trade and you need 5 months, let's say you bought Tesla at this level in February and it goes down and it comes back up and you're finally profitable here in May, you're not doing this right. Right? Think of all the gains you could have made between February and May if you had traded along the trend. Think of all the sleep that you would have been able to have if you had not traded against the trend. Think about all the hair you could probably still have on your head, right? Like, I'm in a room full of guys who are half bald. So, I mean, you might actually grow a hair or two. So, legitimately, our goal is to be to profitability as fast as possible.
Mm-hmm.
And that same goal applies to, I want to find out if I'm wrong as fast as possible. I don't want to wait 5 months to find out if I'm wrong. I want to know as quickly as I can so I can move on.
Hey, Chris, on that point, bring up the HIMS chart, the daily chart for HIMS today, because this is the perfect example of this.
Intraday?
What we had,
it's like a 5-minute chart.
No, do a daily. That's fine.
All right,
okay,
there we go.
So what we have is over on the left on the peak is everybody who got caught at those high prices when they had the last run up. But then you look, we have the order block that started over on the right. Not everybody could get out over there. So when we jumped up this morning on it, we had a massive dump of shares that happened, which is what drove this thing straight to the ground. Yeah. This is that perfect example of everything lining up, and the bag holders from, and I don't know when it was, let's say a couple months ago, those bag holders a couple months ago are finally getting released. So it doesn't matter what the news is, they hit those order blocks and it was gone.
Yeah, it was up like 16% first thing this morning, and it round tripped.
Yeah, I mean, legit, there are people who are still holding it here, looking for that opportunity to get out. They took it here and they took it again right here because they finally got a chance to get back out of break even. And that's what the order blocks are showing, right? And if we zoom in on a 5-minute chart, that is a really ugly day right there. Huge gap up and then just sell. Oof.
Yeah.
Brutal. All right, let's go to the next one here. We're nearly done with these slides. Or are we? Oh my gosh, I thought we were. There's so many biases. You have to overcome all of these, guys. Outcome bias. Now, judging the quality of a decision by its result, not its process. This is what I try and talk to you about every single time I put on a trade, right? We are looking for following the process. We do not know what the outcome will be. We cannot control what the outcome will be, right? There are 4 types of trades: good trades, bad trades, winning trades, and losing trades. A bad trade, no matter what, is when you don't follow your plan. You can have bad trades that are winners and bad trades that are losers, but they're all bad trades because you didn't follow your plan. A good trade is when you followed your plan regardless of the outcome. Regardless of the outcome. Looks like I put this here. Sorry, my bad. Let's continue on here. Herding bias. Now, following what others are doing instead of your own system, right? So I'm sure somebody out there on the HIMS chart was like, oh my God, have you seen HIMS? It's up so much today. And all these people are crowding in like, oh, I have to get it. And then they're like, oh, why am I losing so much money? It was the overwhelming number of sellers just totally dominating the number of buyers coming through, right? And this happens when people buy what's trending on like FinTwit, Discord, right? Other Discord groups, not our group, YouTube traders, right? People where you're getting your trade ideas from somebody outside your own plan. So how do you beat it? Similar to FOMO, you've got to ignore the noise. You need the trend and the other buyers to step in, right? You've got to have them to step in, but you need to be focusing on your plan, right? We want to be trading with the trend, but we don't want to be getting in later, like the shoe shine boy or the taxi driver giving you stock tips, right? You're too late at that point. That's when the herd is starting to get in, and that's the exit liquidity. Next, the narrative fallacy. This is another thing that the YouTubers love to do, right? Make decisions based on a compelling story rather than the facts. Let's talk about a compelling story. Do you guys know a stock that has a great story but is a terrible stock?
AMT.
That's what I was thinking
Ford.
too, actually.
Ford.
Ford
Any
Motor
of the
Company?
automakers. Ford Motor.
Oh yeah, there you go. I don't know the compelling story of Ford, but Paul seems to. And, you know, that compelling story is going to get some people excited about it, but the stock itself is not one you want to own. Look at it, right? It's just been trending down for ages and ages. Man, look how far back I have to go. Just down from here. It's lost half its value over the last few years. And yet there's people saying, but listen, the Ford Lightning is the greatest pickup ever made of all time. Don't you understand? You can go 45 miles before you have to charge it. It's awesome. I'm just saying, I'm a Tesla owner. I can hate on it all I want. And looking at a stock like this, it doesn't matter what the narrative is, right? It doesn't matter what the narrative is. You've got to make sure you're following the price action. This is the curse of YouTube. It really is the curse of YouTube, right? You've got so many big channels that develop these narratives, develop these videos over and over, week after week, talking about how great this one particular stock is when nothing's happening except the price going down. So many people get suckered into these terrible stocks just because of the exciting story. Next, pattern recognition, right? Seeing patterns that don't actually exist. It's legitimately equivalent to seeing, you know, an elephant in the cloud. Abraham Lincoln talking to Scrooge McDuck in the clouds. Like that's what can happen if you just sit there staring at charts day after day after day. You're going to be like, oh, well, look at this pattern, right? And then the worst part about it is people create these patterns, right? They draw on their charts like 9-year-olds. I don't do that. I can't do that. I have to see the data, right? But I see charts like this all the time where they just like willy-nilly throw some shit on the wall and they're like, hey, look, when these two lines cross, it's going to go to the moon. Look, it touched it right there. That means it's going to go back up, right? Or it touched it right there, so it has to go back down, but it can't go any further than that line. And then, right? The prediction aspect of it is irresponsible almost, right? But you can make up all kinds of stuff if you're staring at charts all day. So first off, when you stare at screens, you're likely to see things that aren't there, like an elephant in the cloud. So find the data you're looking for, and then just ignore everything else. That's why the OVTLYR 9 is so helpful, right? We can see what we need to see, and then we move on. Illusion of control. This is one my psychologist and I actually worked on. The illusion of control, right? The belief that you can control the random outcomes. The trader thinks precision entries guarantee success. And this is something I like to share, is that when you put on trades, even if it is 100% set up in the OVTLYR 9, it can still lose. Absolutely can still lose. I saw somebody, maybe it was a YouTube comment, I don't remember exactly, but they said exactly that. They said, okay, so if the OVTLYR 9 sets up, then I'm guaranteed to win. So I'll just, I'll go full portfolio every time it sets up. And it's like, whoa. All the momentum's in your favor, but we can't guarantee any outcome. Impossible. Can't guarantee any outcome there. And how do we beat it? There's no possible way to control the outcome of the trade. We have two safety nets, the stop loss and the position sizing. If you think you know better, you'll be gone before you know it. Let's see, the disposition effect. Selling winners too early and holding on to losers too long. We've all been there, right? And how to beat it. Being scared of winning is a real thing. Being scared. This is actually something I dealt with my psychologist. I was scared of winning. So what did I do? I kept repeating the same mistakes over and over. How do I fix that? Wait for entry and exit signals and don't do anything in the meantime. I've been there. I've done exactly all these mistakes. Okay. That's why I say we as outliers have to overcome all of them. Defensive attribution, blaming external forces for losses, and then of course claiming credit for the wins, right? It's always somebody else's fault when we lose, but we're the geniuses when we win. Right? That's always the case. Always the case every time. So you've got to take responsibility for the winners and the losers and learn from both of them. Last two, resistance to change, inability to adapt to new markets or update your beliefs. There is an old adage that says a trend following strategy only works 40% of the time in a trending market. 40% of the time, which is one of the reasons why I sit in cash for so long, right? If more than half the year my strategy doesn't work, I don't want to be putting my money at risk at all. I want to be sitting in cash and not effing up the rest of the time. That's what you have to do. You have to be ready to just hold tight, hold your cash, because that is part of your plan. Emotional reasoning is our very last one. I know this has been ages. I'm sorry. Believing your feelings are facts, right? I feel like this is the bottom. It just doesn't seem right. It should go up from here. It can't go any lower, right? It's probably the biggest bias to overcome. And it's done by listening to what the market is telling you, right? That's how you overcome this, by listening to what the market's telling you. Like I said, it's not sexy, it's not exciting, it's not fun, but this is the only way you'll be successful as a trader, period. I mean, look at all these different biases that we have to overcome every day. Every single day, we have to overcome, I think there's like 30 something of these that we got to go through. Every single day we have to do this. If we don't, we'll end up like the other 90%. It is a rule that this is what happens, and it's not a theory. And in order to be profitable, you have to do the opposite of everybody else. Now, I boil it down to just these 3 sentences here. And this is what I look at in my trading plan. There are no expectations for the outcome of this trade. I have no idea where it's going to land. I have no profit targets for this trade. It will be what it's going to be. I just have a plan to get out when one of my exit signals happens and not do anything else in the meantime. So you boil it down to those 3 sentences. That's most of trading psychology right there. But you got to own it. It's one thing to read it. It's one thing to hear it. It's another thing to really own it yourself. Now, I've got some homework for you guys. I have some homework for you guys. It's the flashcards. It's flashcards, okay? Over in the Discord, in the announcement section, I dropped a link here for flashcards. And if I have it set up still, it should work. Hang on. See if it works. All right, so when you get into it, it should look something like this. Now, make sure you hit shuffle. There are 40 of them that hurt your account, and 40 of them that help your account. So let's look at this together. Let's do a handful of them together, okay? Would you say remembering that the market doesn't owe you helps or hurts? Go ahead, shout it out.
Helps.
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 That's right.
Helps.
All right. Let's go to the next one here. Impatience for setups to develop. Does this help or hurt you?
No,
Hurt.
that hurts.
Hurts.
That's right. Good job, guys. Next, not setting expectations on the outcome of the trade. Does that help you or hurt you?
Help.
Help.
That helps. That helps you.
Boom. You guys know it. You guys know it. Okay. Confirmation bias. Only seeing what supports your trade. Does that help you or hurt you?
That helps.
Hurts.
That hurts you.
That's right. Very good. This. You guys are so smart. Emotional attachment to a stock. Does that help you or hurt you?
Hurts.
That's right.
No, that hurts. Hurts.
Hurts.
Lunar.
Hurts. There you go. There you go. Next, rereading your trading rules before every trade. Does that help you or hurt you?
It helps.
Yeah.
Helps.
Boom. Very good. Averaging down in a downtrend. Does that help you or hurt you?
Hurts.
Hurts.
Stupid.
Boom. Very good.
Hurts.
Trading too large due to overconfidence or desperation. Does that help?
That'll
or
hurt you.
Oh yeah, that'll hurt you.
That'll
This
hurt
right
you
here
bad,
is the
yeah.
reason why I say do not try to trade for income. If you are trying to make money every month, you are going to get desperate to cover your mortgage, to cover your utilities, to cover all your bills. You're going to get desperate. You don't want to be living that lifestyle. You're going to be making trades you don't need to take, right? And that's going to hurt you. Writing down trade plans in advance. Help or hurt?
Helps.
Help.
Let's see.
100%.
Oh, yeah. Very good. These are easy. You guys know all the answers for sure. Gratitude for the opportunity to trade. How you like that?
That helps.
Does that help or hurt you?
We're not worthy.
It helps, of course. A trading routine and checklist.
That helps.
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 Yes.
Excellent. Focusing on A+ setups only.
Helps.
To help or hurt you?
That helps.
Helps.
Not sure what that means.
Embracing boredom as part of trading mastery. Ooh, a little trick question here.
Helps.
Embracing
That's
boredom help
That'll
you or
help
hurt
you.
you?
That'll help.
Okay, say it again.
Yeah.
Help.
Helps you. That's right. You got to embrace the boredom, right? Sitting in cash and not effing up is part of trading mastery. Process or outcome thinking? Our process is greater than outcome thinking.
Yes.
Yeah.
That helps.
Very good.
Yep.
Acceptance of randomness and uncertainty. Does that help or hurt you?
Helps.
That
Helps.
helps.
Helps. Very good. Chasing red candles to short or green candles to go long.
Ugh. No, that hurts you.
A little tricky. Hurt?
Hurts.
Very good. You
Yeah.
guys are killing it. That was a tricky one.
No chasing.
That's right. Using affirmations to reinforce discipline. Does that help you or hurt you?
That helps.
Help.
Say
Yeah.
you could say like we talked about this not that long ago, right? When I was putting those trades on, I actually had to talk to myself in the mirror, like, you got this, right? This is what you've done your entire life. This is the biggest trades that I've ever put on, and the most that I put on in months all at once. And it's like, just follow your plan. Don't be scared. The outcome will be what the outcome will be, but you've got to follow your process. I had to go through that myself like a month ago. So if you still do that now, you're in good company. You're doing great. So there are many, many, many more flashcards, and I want you guys to go through this. Your homework is I want you to go through this until you get a perfect score. All right? It's going to be easy, right? But you may have to go through it 2 or 3 times. Okay? I want you to go through it until you get a perfect score. So that is going to wrap all of our slides today. Let me ask you guys here in class, how can I help you? What's up, JC?
When we go in on an uptrend, if we see a signal to get out, it doesn't matter. We hit it. If it was a false signal or a false down and it comes back up, we go in again and ride that baby up. When we get our out signal, we hit it again as many times. It doesn't matter. When you do that 3 times, is that considered 3 buys? And does that put you in a different category within a broker? Like you're now a day trader and you need a minimum amount in your account?
So you only will be labeled a pattern day trader if you have less than 25,000 in your account and you've done 3 open and closings in the same day in a 5-day open and closing round trip in a 5-day window. So if on Monday you do a round trip, Tuesday you do a round trip, and Wednesday you do a round trip, if you do a 4th one, you're going to get locked out. Your broker may implement a 90-day restriction on you. It really depends on your broker. If you have a cash account, you can actually get what's called a free ride violation. I got that from the SEC. That was fun. But it's basically just you're locked out of your account for 90 days. Now, if you open and close and they're not in the same day, even if you open it on Monday afternoon and close on Tuesday morning, that doesn't count as a day trade. The only time it works against you is if you have an account less than 25,000 and you're opening and closing them on the same day.
Is that considered an open and close when you're coming down and then it comes back up? Yeah, because you got to get out of the trade and then you go back into it. So that has to be considered a close, right?
Right. But if you're trading at the end of the day, then you're not going to likely get out on the same day. For sure.
Got it.
Hey, while we ask these questions here, I want to answer your questions in the chat. Go ahead and type #Q and then your question, and I'll do my very best to answer those after we get through the gentleman in class. Mike, what's up?
Yeah, I just wanted to, you asked earlier about the slides that you just shared with us for this class. You do have to sign in if you don't have it does ask to sign in. I think you asked that. I don't know if that's important to anybody if you don't have a Microsoft.
Oh, it does. Hang on.
No, the slides themselves. It asks you to sign into Outlook Outlook.
This?
Oh,
the
no.
PowerPoint slides.
The actual lesson, yeah.
Really?
We just went through.
I didn't know that.
Yeah, I have Outlook. Well, yeah.
I thought I could
I
just
have
share that
Outlook,
over
but
and
it,
you can download it as a PowerPoint.
You
Well,
may not
maybe
have
it didn't have
PowerPoint
print.
on your system.
yeah,
Maybe throw it in as a PDF.
yeah. I've got. I didn't know if anybody else did.
Give me a second here. That's new to me. Has the other ones done that to you guys?
Yeah, but I
have
have Outlook,
Office.
so I don't know.
Yeah, I
You
had
have Office?
to get Meet Office.
Okay.
Well,
I'll
maybe
make
it's
it-
not an issue if everybody's got it then. But anyway,
Hang on.
didn't
I'm
mean to-
saving it as a PDF for you, Mike, and I'll upload that too.
okay.
Where are the flashcards again in the announcements?
Yeah.
Yes, in the
Yeah, but this
announcements, you
Got
will
it.
see a link for the
Got it.
flashcards.
Yep.
I'm
You
able
don't
to
need an
open them.
account for that, do you guys?
No.
Okay, Mike, I just dropped in. The wrong button. Sorry, I just dropped in a PDF version for you.
Okay. Yeah.
Cool, thanks. I'll take care of that. What other questions you guys have?
I was just going to throw a comment in, Chris, on the pattern day trading discussion. Ideally, only trade twice if you're going to do it, and then it gives you one emergency escape. If you enter a trade intending to hold overnight and something goes against you, it gives you a parachute to get out. Otherwise, you may be stuck.
Yeah.
So if you're in that condition where you're classified as a pattern day trader, under 25,000 in a margin account, save yourself the escape just in case, because we don't know. Trump could tweet the minute after you enter that thing, it could crash.
So you get one chance to, if you have two open and you pattern day trade, you may be stuck with an open order for 90 days.
Well, they'll let you close the third one, but then you're locked out of your account after that point.
If you had a bunch of calls, you may not.
What was
be
the
able
dollar
to,
amount? You got to be over 25.
25,000.
25,000.
Yeah. If you have over 25,000, it doesn't matter. You can do whatever. Because they think, the SEC, think that if you've made $25,000 and you start investing it, you should be a genius at this point, right? Hashtag should. You should be a genius at this point. Any other questions from you guys? No? All right, cool. We'll go to questions from the chat. Actually, I'm glad Dave is here because Senior Wahoo has a question. That's off topic, but can you go over how SGov works? So this is something that I actually learned a lot from Dave yesterday on it. So Dave, if you don't mind just sharing a little bit of your knowledge, that would be really sick.
I would be happy to. So SGov gives you exposure to the 30, maybe 3 months, sorry, the 3 month T-bills. And it basically just accrues interest every single day. It's a great place to just park cash. Comes out to about a 4% average yield per year. I go into it at the beginning of the month. It accrues daily just through the more normal market appreciation. If you look at the chart, it's just going to be a zigzag chart. It goes up, comes down, goes up, comes down, because it resets. And I enter the first day of the month. I exit on the last day of the month. I don't care about the dividend because I've already captured that dividend when I sell. It resets back down and then continues to go back up. Yeah, Chris has got the chart right here. So I like it. It's just a great way, when we're sitting in cash, just to earn a little bit of interest, depending upon your needs. For me, it's 1 month's worth of my living expenses just sitting there. So it's completely worth doing, but it just gives you exposure to the treasury bills. You can exit at any time. You can go in and out just like any other stock. I don't think there's even a fee to go into it with Schwab. I know stocks are usually like 4 cents. I don't think there's even a 4-cent charge to go in and out on it. So it's just a great place to park some money, to hold it until you're ready to do something.
I think Joe has a question.
Yeah, Dave, just a point of clarification. You wouldn't do this if your settlement account was already like a mutual fund or some account that was gaining interest, right? The only reason you're doing this is because your broker doesn't have that feature.
Correct. Schwab does not offer interest on anything just sitting idly. So in my case, I put it into this and, make a little extra money on the side. Today I made, I don't know, $30, but it adds up. And that's, the point over time. Let it work for you. Even if it's just 4% a year, it's better than zero.
Mm-hmm. It is. It is better than zero. And that's why I was interested in it. Now, I liked Dave's thought about getting in and getting out. And when I was talking to Dave about this yesterday, I saw this chart and I was like, wow, that's really interesting. It goes up and then it pops down, goes up, pops down, goes up, pops down. And the way Dave described it made so much sense. What it's doing is it's gathering that interest that you're earning each day as it's going up, right? And then it pays out the dividend. When it pays out the dividend, and this is on every stock that pays a dividend, it goes down by the price of the dividend. So that's why it resets over and over and over. Now, to Dave's point, he gets in on day 1, gets out on day 30, and then he repeats day 1, day 30. So he's still capturing all of that interest that he would be earning by holding it with the dividend, but he's just round tripping it once a month. Also, that shouldn't count for any wash sales, because wash sales only work against you if you're a loser. And as this goes up every day of the month, because it's just based on the interest earned on T-bills, T-bonds, whatever it's doing in the background there, it doesn't really matter what's doing in the background. It's just capturing the yield on those government securities, right? So it may fluctuate a little bit, right? Instead of being from 108 cents to 139 cents, it might go from 131 cents up to 172 cents and repeat and repeat and repeat. So this is actually something I bought today, and I will continue to buy month after month and put my cash in, repeat Dave's process like that. And you actually get paid a little bit faster on that too, because it's got like a 3 or 5 or 7 day. It's got a multiple day waiting period for that dividend to actually get into your account. Whereas if you go and you get out right here on the last day of the month, which as you can see, the last day of the month is always the highest day of the month, which is because it's just earning that interest. Then you can repeat the cycle month after month, capture that interest. This is really cool. This is really cool. I'm glad that I recently learned about this. Like, this is actually going to make a difference to me.
Yeah. And there are tax benefits. Talk to your tax professional, but these are treasury bills. So they are a preferred tax status when you look at that appreciation. So,
Dave, do you go out on the 30th, or you wait till it's the 30th? Is it the end of the month, 31st, 28th February?
Yeah, whatever that last trading day is, I will go out that Friday, or I will go out that Thursday if I know I'm not going to be paying attention on that Friday. But yeah, it starts showing up on my calendars to get out.
Okay.
Hang on.
All right. Let's go to the next question here.
How was that chili? It was good.
What?
Good.
Hang on. One of y'all is not muted, and it's getting loud up in there.
Somebody mute.
Hang on. I'm going to mute all you guys. What in the wide world of sports was that? It sounded like a donkey walked in. All right. Wait, there was a question in the chat. How much does OVTLYR cost per day? Well, Eric, that is a great question. OVTLYR actually costs just 82 cents per day, if you can imagine that. And that's 64% off the regular monthly price. And you can upgrade from the monthly to the annual pass for just one click. Just one click, and you'll save 64% off. Let's continue on here. Dave, really appreciate you going through all that, by the way. So does RT Liner. Really appreciate you. Rick talks about Robinhood giving you 4% and sitting in cash if you have a gold account. I know that's something that Mikey Mike has looked at before. And if that's the case, you wouldn't really need SGov. This is really for if your broker doesn't pay you anything. That's it. Let's see if there are any other questions. Oh, Barry G asked, do you have a source for the 90-90-90 quote? Sounds crazy high. Chris, you don't know what you're talking about. That can't be real. That can't be real. Well, if you Google 90-90-90 rule in trading, it's exactly that. It's a cautionary statement that 90% of new traders experience a 90% loss in the first 90 days of trading. It's often used to highlight the significant learning curve as potential risk, especially for beginners. Now, this is legitimately something that brokers take into account in their business plans. They know that 90% of the people who sign up in quarter one, they're probably not going to make it to quarter two. And they certainly aren't going to be making it to quarter three. So it's real. It is very real. Let's see. Any other questions here? Okay. I don't see any other questions with the hashtag Q, so we can wrap it here. Guys, really appreciate you. I know today was a deep one, but this is what you're going to have in order to be successful. Now, this is definitely different than what you expected, I bet. I bet you expected OVTLYR U to be like, here's where you buy, here's where you sell. This is what you got to do, right? None of that matters if you can't execute your plan. Once you execute your plan, then all of those other pieces can start to come together. So thank you all so much for coming. Thank you so much for the chat, for being here live and asking questions and learning. Hope you guys all have a fantastic day. And we'll see you next time. Talk soon.
Thanks,
Facebook
guys.
to the screen here. All right, see you guys.